So a lot of people start businesses, and it's fine in a way. They want to start a business because they like the tax breaks. And if you start like, let's say you like to cook and you start a business around cooking, now all your cooking expenses, all your fancy cookware, that all becomes a tax write-off, more or less. I mean, maybe the government, wherever you live, will catch up with you. But I'm not asking you to do the right thing because I don't want you to get caught by the government and punished. So how do you spend your investors' money the right way? How do you know if something's really a real expense? Well, you look at it from the investor's point of view. It's like every time you're spending money out of your company's treasury, what's the return on investment you're expecting from that? If you're not getting any return on investment, it's probably a bad expenditure and shouldn't be, it shouldn't be on your company's books. You're going to have to pay yourself the salary, get the tax hit, because it's a hobby. It's your thing. Now I'm going to give a really interesting example. I used to ski, and it was super cool. I was on a ski lift with a guy. He was a real estate broker. He told me that his whole season pass and all that he wrote that off. And I said, really, how do you justify that? He said, well, because everybody who goes up on the lift with me is rich, and I pitch them on my real estate practice, and I've gotten a lot of clients this way. So the moral of that story is that for most of us, we couldn't justify writing off the season pass to a ski resort from our business. But for him, it was really clear. He invested a certain amount of money every year there was his marketing program, and it worked. The point is, it worked. If you're spending money on, marketing, or gym clubs or things like that, I mean, you can have a certain amount that's, that what we want to talk about is like your salary and amenities. Okay, you can look at that, how many amenities and all the tax implications of that. And we're not going to get into all that granularity, but when you're spending money, your investors' money, and also look, even if you don't have investors, like I run my businesses this way with my own money because I'm building companies that I want to be able to sell, and I don't want to have to go back and redo the books later and try to make it look like the company actually made money. And again, this is the pitfall. Once probably I repeated the story, but anyway, it's such a good story. I'll tell you again. I was brought on to advise a massage school in Moscow, Idaho. And it was this great school. It operated for 20 years. It could have operated for another 20 years. And the founders wanted to sell the thing. And so when I looked at their books, it's like, well, you didn't make any profit. You said, yeah, well, because we expensed a lot, wink, wink. It's like, okay, well, that was good for you. But the thing is, if you had actually kept the profit in the company and paid your taxes, a bank would have financed your company. It's a seasoned business. You could have brought in a third party. That guy just show up at the banks with your books and get a loan, and you'd be selling the company for some huge multiple. Instead, you basically threw away a few $1 million of asset value just so you could, cheat on your taxes, to be honest. I mean, that's exactly what they were doing for years, was just cheating on their taxes by expensing personal expenses through their business. So, if you're serious about business, you want to create wealth, you want to use capitalism to the max, there's other ways to reduce taxes. These days, there's so many, maybe don't start your company in a high tax country. Maybe don't live in a high tax country, or just whatever the equation is, live by the rules, play by the rules, and you'll find that works better. That's how you create wealth. If you're expensing all of your private expenses, and then the company's not showing any income, then what bank is going to loan against that? Or who's going to put equity into this, like money, losing or, just barely breaking even kind of company? Why would anybody want to buy that company? And maybe somebody with equity, but equity is hard to get, especially for a smaller business like You're not going to get a whole lot of equity. People's just showing up with $1 million of cash who also then want to run your company like a manager. So these rules are just as important in small business as they are in big business. Run your small business like a business, and don't spend you're the biggest investor. Don't spend your business treasury on things that don't produce a return on investment. And for God's sake, don't spend your investors' money on stuff that doesn't produce a return on investment. Yeah, you might make a mistake, you might try, but the intention has to be pure. It's like, yeah, we tried this marketing campaign, we put in 10,000, it flopped. Okay, because the intention was to make 100,000 by investing 10. It didn't work. Every business is going to involve a number of asymmetric risks. That's why businesses can grow asymmetrically, because you're taking small asymmetric risks. If one pans out, okay, so a bunch of small losses and some big gains. You're being the investment manager for your investors' money. Live that way. Yes, you're the CEO of the company. Yes, you're in charge of product development. You're in charge of a lot of stuff. But integrity with money is the glue that lets, whether you're just running a little business for yourself or you want to make a global enterprise, that is the secret sauce. And I think that's probably a good place to end the sequence. So now you've got a pretty good story about everything from starting from zero, raising your own salary if you want to be a leader and you can't afford to quit your day job. That's the Make My Nut part of the program. You're building your syndicate at the same time, so you're shortening that time frame. And this is such a great summary. I think I'm going to make a summary video rather than do it here, because the point of this video is integrity after the sale, how you spend the money, and keeping those communications regular every month, clockwork, and your books every month, clockwork. Okay.